Hi everyone, welcome back to Upside Down Data. So today I want to talk about a new risk indicator that we just launched for XRP. So this is an indicator called the Upside Downside Potential Indicator. We actually have versions of this indicator for some other crypto assets. So for example, Bitcoin, Ethereum, ADA, we have videos on the channel about those, so make sure to go check those out if you're interested. But today I want to talk about the one we've just created here for XRP. So the graph that I'm showing you here is the price history of XRP over its entire lifespan, and the price here is in logarithmic price. And so each one of these dots is a day, and the dots are color-coded based on the UDPI output. So as I mentioned, the UDPI is a risk metric. It's a risk indicator. And the way it works is that the higher the number, so it ranges from 5 down here to -5, the higher the number on the UDPI, the greater the risk in that current moment in time. And the lower the value, the lower the risk is. And so the reason we call it the upside downside potential indicator is that really the way you can think about this is that when it's at 5, that means that the downside potential is at a maximum and the upside potential is at a minimum. So it's got much further to fall than it does to rise in that moment. And conversely, at -5, it means that the upside potential is significantly greater than the downside potential. So if we go back to the graph and we look at how the model has performed over the price history of XRP, we can see that it does a pretty great job at calling out these risky moments here where XRP was really up in kind of a bubble and was likely to pull back from that bubble, and another one we had here in the spring. And it's also really good at calling out these low risk areas, these areas where accumulation of XRP has been historically beneficial, where if one had accumulated XRP during these times, one would have made pretty sizable returns on those investments. And then of course, if one had sold at these risky points that the model identifies, one would have been able to lock in those profits and then potentially even come back in, buy back in later to ride another leg up. So one thing I want to point out about this model, I think the XRP version of the model demonstrates really well, it's one of the strengths I feel of the UDPI, is that its ability to identify when we've likely hit kind of a peak, a top, and then when we're in this correction where the risk stays high, the UDPI stays high. And really what this would mean, going through this in real time, is we just hit, up around, $3 up here. Then the UDPI would have told you that as we regressed back down closer to $1, that's still not a good entry point. That, the risk is still extremely high, the upside potential is still extremely limited, and the downside potential is quite high. So basically it would have told you stay out of the market, only maybe re-enter during these green zones. So now again, none of this is meant to be financial advice, but the idea here is that the UDPI is a pretty useful source of information. It's really good at telling us when the market seems to be quite high in risk and when it seems to be a bit lower in risk. Now, something I also want to point out that I think is a strength of this model for XRP here is if you think back to the summer, we had this huge correction off of the big run that we had in the spring. Bitcoin crashed 50%. The rest of the crypto market corrected massively. XRP also had a sizable correction here. And at the time, everyone was very bearish about the market, or a lot of people were very bearish about the market. People were calling for Bitcoin to drop to 10K. They were calling for all the other assets to tank as well. But if you look at what the UDPI is saying at this point, it's actually saying the summer was a great time to be acquiring XRP. If one had really been acquiring XRP at that moment, one could have really loaded up before this huge run that we just had again here going into September, where the price appreciated massively, and you would have made some nice profits. But then also I think is useful about the model is it did identify that this move up here in September was a bit risky. The risk level increased quite dramatically, definitely beyond a range where you'd probably want to be buying. And now we're kind of consolidating and we're moving back into what the UDPI is classifying as being a less risky zone currently up here where we stand today. So that's how the UDPI has played out over the price history of XRP. Another way we can look at the model is, instead of looking at the price and then mapping on the UDPI with the color, here I'm just mapping out the raw output of the UDPI for XRP across XRP's lifespan. And so, UDPI on the y-axis, -5 being the lowest possible value, 5 being the highest. And I've just left the color coding here just as another visual cue. So again, dark red means it's up here, around the 4 to 5 level, and then down when we get to this dark green, that means it's down here between -4 and -5. What we can see is that what the model will do is it will really spike up, it'll really shoot up when we get to those market cycle highs, or those kind of mid-cycle highs. And then as price corrects off of those peaks, the UDPI will then come back down and suggest that risk is now getting relatively low, that there's a lot more upside than downside potential. And then if there's another run, the UDPI will pick up on that as well. It'll peak out at that local top, and then it can come back down and say, how risky is it in a given point in time. And then we just had that happen here in the spring, had this great accumulation zone here in the summer, and then now we're coming back down here to this kind of little bit of a good time to buy, is kind of what it's saying. Again, not financial advice, but relatively low risk. Not as low as the summer, but it's falling back down into those levels. And this is, I think, a really useful part of this model, because during the summer it was certainly didn't feel like a very safe time to be buying anything. Like, it really felt like that, like, prices were falling. We didn't know how far they were going to go, and a lot of people were saying they were going to fall further. But with the UDPI, what you could have done is say, well, even though everyone's being bearish right now, really, this indicator was saying that bearishness was not justified, that actually people should have been quite bullish on the market, because especially for XRP here, it really seemed to be a great time to be acquiring XRP. And then sure enough, had one done so, one would have profited handsomely by buying that XRP down here and then selling it up here. So just to talk a little bit more about where we currently stand with XRP. So here is the current value. So we're sitting at -0.85. So again, 0 is kind of that middle range where the upside potential and the downside potential are about the same. And so anything below 0, I personally think of as being more in the buy territory, more in the kind of times you might want to be acquiring. Now again, this isn't financial advice, so do your own research before you make any decisions. But what the model is suggesting is that this is not a terrible time to be thinking about XRP. The XRP is looking like it's reasonable. And it's also important to note that so far, the UDPI has been falling, that this value has been getting kind of progressively lower and lower. So it could be that right now might be an okay entry point, but it could be that if you wait a little bit longer, or if one were to wait a little bit longer, again, not financial advice, that it could be an even better entry point. And it's useful also to consider where we stand right now with the market. So, Bitcoin tends to do really well in the last 3 months of the year, Q4, October through December. That tends to be kind of Bitcoin's time to shine. The rest of the market kind of stands still. And so with that in mind, it could be that with something like XRP, it might actually be better to be thinking about something like Bitcoin right now, and then considering a move into XRP later, after Bitcoin has made its first big moves, and then the rest of the market, including XRP, will tend to follow after that. Now again, not financial advice, make your own decisions, but that's just one thing to consider, that with these risk levels, it's important to keep context in mind. Where are we in the broader market? Is there another asset that's likely to be running before the asset you're looking at? And if there is, if you buy an asset and it's just sitting there, that's opportunity cost. You could have put that money into a different asset, and if that other asset is one that's likely to move up before the asset you're focusing on, so in this example it could be XRP, then you'd be missing out on some profits. What you could be doing is putting it in Bitcoin, riding that up as it goes, and then moving it into XRP to ride XRP up as it goes along as well. So again, not financial advice, but those are just some things that can be useful to think about in this market, about what is your opportunity cost for what you're putting your money in, and is it the best time right now to put it in, even if the risk is relatively low, because risk could keep on falling lower, and there could even be better entry points later on. So So those are just some things that I've been thinking about with the market recently, and kind of where we stand with XRP today. So if you enjoyed the content, please leave a like and subscribe to the channel for more updates. We'll be putting out a lot more videos about XRP, about Bitcoin, Ethereum, and also launching new UDPI indicators for additional assets down the line. All right, thanks for tuning into this video, and just remember, with the UDPI, we're all going to make it.